Very good afternoon and very good evening to everyone. I hope everybody can see my screen. I see a lot of people are joining in. We'll wait for another 1 more minute for people to join in. And then we'll quickly start the session for today. Today is an interesting one. We are starting our series on navigating net zero and specifically talking about a sector. We have not done this before. And probably this is a start of, we diving into different sectors, finding what are the challenges and, addressing them. So I'm very excited for this one. So some ground rules before we start. I believe we can take the questions at the end. People are happy to post all the questions in the Q&A section. I'll not stop in between. Probably what I'll do is I'll set aside 10 minutes at the end. Well, I'll complete my presentation in 20 minutes or 25 minutes, and we'll give 5 to 10 minutes for questions specifically. I am doing this for people who are from the real estate sector who are probably facing problems in terms of their own journey in terms of sustainability or ESG. They are handling the role of ESG managers or heads of ESG in their own companies, and they would probably want to learn more about what is happening with respect to ESG in real estate and construction industry. And I think this session will be very useful for them. I see that several people have already joined. It's 4:33 in India. Shall we get started? All right. So this is the 8th webinar in the Navigating Net Zero series. Today we are going to talk about carbon accounting and ESG reporting for real estate and construction industry. Now, before we deep dive into the actual topic, I'm assuming that people have a bit of an understanding of ESG and sustainability. So we are not going to introduce ESG and sustainability's core concepts. That is something that you can, learn from another webinar of mine where we talk about the ESG landscape, where we have introduced the various ESG and sustainability concepts. I request people to go to our website, find that webinar, and that is another webinar which is half an hour. So you can definitely do that. Here we're probably going to talk more on what goes beyond, right? Once you've understood the basics of ESG, what are the various requirements in terms of the regulations, what are the requirements as an ESG manager that somebody would have to perform, what are the requirements, reporting requirements, what is the actions that somebody could take in order to follow this process really well. So that's where this webinar is designed for. In terms of helping those people, right? So let's deep dive and look at the various sustainability regulations that are impacting real estate and construction industry. Now, before we talk about the various ESG regulations that are applicable to probably a company, let's break it down, because when we talk about real estate, many a times we confuse what is applicable to a building and the same is applicable to a company, which is different. Of course, when we talk about a building, you may talk about applicability of national building codes, right? For an example, the National Building Code of India, the BCA in Singapore, the Al Safat Green Building Regulation in Dubai. Uh, it could also be a building energy code, which could be separate. Like here in India, it is ECBC, which is Energy Conservation Building Code of India. BCA in Singapore also talks about it. It's the same for building as well as for energy. And then, for example, in the Europe, which is EPBD, right, which is Energy Performance of Building Directive of Europe, right? So there can be national building codes, there can be building energy codes. Then, of course, if you're constructing a new building, then you have the environmental clearances where the respective ministries would give you clearance on constructing of the building. If it is a brownfield construction, definitely it needs to happen. And then there are voluntary building certifications like LEED, IGBC, Fitwel, well certification, and many others. Of course, these are all regional, so there's a different one in the US, different ones in UK, for an example, which is BREEAM. China has got their own certification. Singapore has its own. Australia has its own. So there are probably about 30 or 40 green building certification authorities across the world, right? So those are also something that can be taken up. These are applicable to buildings. On the other hand, when we talk about companies, there are these regulations, which is these are disclosure regulations primarily, which are focused more about, you know, what is your impact towards the environment? What is your impact towards society? How are you governing ESG related risks and how are you disclosing it, right? So those are primarily the ones which when we talk about ESG disclosure regulations. People in India can relate to BRSR. BRSR is applicable to top 1,000 companies, right? And in the Europe, it is CSRD. SFDR is a specific one which is applicable to primarily companies which are investing in real estate, right? And also for REITs, which is Sustainable Financial Finance Disclosure Regulation. That is what SFDR means. Thereafter, there are ESG ratings. For an example, GRESB, very much popular for real estate companies as well as REITs, which is Real Estate Investment Trusts. GRESB stands for Global Real Estate Sustainability Benchmark, and I think this has been growing for the last 5-7 years and is very much utilized by uh, investors and other construction companies as well. Lastly, there is, of course, there are MSCI, Moody's, and others which are part of the ESG ratings. Then there are ESG guidelines. So SBTI is one which everybody's aware of, which is Science-Based Targets Initiative, primarily talks about how your ESG goals, particularly emission goals, are aligned with Paris Agreement or not, and how scientifically you are trying to reduce your emissions or tracking it. Then there is the Sustainable Development Goals, United Nations Principle of Responsible Investing, United Nations Global Compact. So there are a lot of them. If you want to know about all of these, some of them are listed over here. We'll share this presentation with everyone. In fact, this video will be uploaded to our website, so you can definitely go over there and have a look at all of them. And if you want to read more about it, search for it, look for the right standards and regulations, and upgrade yourself. Now, some of the important ones which I would cover from among these for India and Middle East, because that's the time zone that we are doing this right now for. So in India, when we talk about ESG regulations, primarily there are two, or rather, this is basically one which is divided into two regulations, which is BRSR and BRSR Core. BRSR is focusing primarily on the ESG disclosure. Currently, it is mandated for top 1,000 listed companies, top 1,000 with respect to revenue. It covers environmental, social, and governance aspects, and it is a predefined format which promotes uniformity in terms of disclosures, right? So that's a very good thing about BRSR. BRSR is of course applicable to real estate and construction industry. Those BSR is primarily applicable to all the listed entities. It is not applicable to private entities, of course, right? But what we think is BRSR is going to be expanded to more than top 1,000 listed companies also. And once it does, almost about every listed company would be following this particular format. In my opinion, BRSR is very well built because it takes in the best of all the ESG regulations out there, and it has tried to integrate it very well into a package which can be very well understood by humans as well as machines as well. So it is built on, it is supposed to be in a format which is machine readable, such that comparisons could be made among companies in terms of what they are disclosing and how they are disclosing. That is one of the core intent of the ESG reporting. So BRSR is definitely something that one should learn more about in terms of their 9 principles and how they are approaching the ESG regulation. We have a separate webinar that we have done on BRSR that people can go and learn about. BRSR Core is an addition to it, which primarily mandates the assurance of a certain ESG KPI, which is already part of BRSR. And this has been mandated initially for top 250 companies starting 2023. BRSR, of course, started in 2022. So these are the two core regulations that are there in India. Apart from that, of course, there are ECBC and NBC codes, but that are applicable at building level. But there are, of course, green building certifications. Now, the reason I've mentioned it over here is because they are not mandated, but somewhere or the other, they are promoted by the government or municipalities or states. So several states in India and municipalities promote and incentivize green certification. So a higher FSI or floor or FAR, floor area ratio, which is commonly known as, is given for buildings which are going for green certification. Green certification we've covered earlier, which is LEED, IGBC, GRIHA in case of India, but there can be others if you're talking about outside of India. Now, talking about Middle East, I think every country in the Middle East has got some or the other regulations. I'm covering only 3 over here, but we can provide a separate list later on all the regulations that are applicable in the Middle East. A few notable ones are here. For an example, in case of UAE, the Estidama Pearl rating system is there. This is for Abu Dhabi, and it's something that is mandated for buildings, wherein they are to maintain a certain energy, water, material, and quality of life. So that is the core requirement for achieving a rating under this particular rating system. This is required for new development and not for existing development, right? In addition, there is an upcoming law in 2025. This is probably be released in May of 2025, which aims to support the net zero strategy of UAE 2050. It mandates climate action across sectors, which includes construction and real estate, and it primarily focuses on carbon reduction, reporting, and adaptation. So what it indirectly does is it will ask you to do a GHG accounting and its disclosure. So that's a very important aspect. We're going to talk about carbon accounting also in some time. With respect to Saudi Arabia, the Vision 2030 ESG initiatives are definitely is something that started in 2016 and is kind of encourages ESG integration in line with the kingdom's sustainability goals. So that also talks about ESG disclosure, particularly carbon accounting. So similar to these, there are, of course, green building rating programs in the Middle East for all the Middle East countries, as well as their own individual goals towards, the net zero, achieving net zero by 2050, 2060, or 2070, whatever has been agreed upon by that particular country, right? Um, we have spoken about the scope emissions, and of course, that is something that is key to our discussion. Now, we'll probably cover some aspect of the scope emissions because we have covered this in our previous webinars. I'm probably saying this again and again. Uh, so we have done one on scope 1 and 2 emissions, and we have done one on scope 3 emissions. But here we'll probably little bit talk about how those are applicable to the real estate and construction industry, right? What is the difference? Because when we spoke at that point of time, it was industry wide. We'll talk about which ones are very specific to real estate. And needless to say, I think all 3 scopes are applicable to real estate and construction industry also. The only difference would be in terms of scope 1 and scope 3. Now, in case of scope 1, when we talk about, before we talk about the various uh, uh, various categories, subcategories. We will first talk about the organizational boundary and operational boundary. Um, Now, in case of organizational boundary, I think it is very clear and it's very straightforward for real estate and construction industry. Now, there are three approaches which GSG protocol talks about. One is the equity share approach, wherein if the parent company owns another company and whatever share it owns, let's suppose say parent company owns company A and has got 50% equity share, then they'll be reporting only 50% of the carbon account or carbon generated for that from that company. Uh, with respect to the operational control and financial control, it's a bit different, of course, when the parent company reporting the emissions at their level, they'll report the emissions for company A if they have the operational control in the operational control approach, and only if they have financial control in the financial control approach. In either cases, there's no midway. Either we are reporting or we are not reporting. If you've got the operational control, we'll report it. If they don't have the operational control, they'll not report. Same is the case with the financial control approach. So that's how organizational boundary plays a key role when talking about a large company. So this happens a lot in case of real estate firms when you've got partnerships, you've got special purpose vehicles, and you need to account for those entities also when you're reporting at a parent level. So very important aspect, even before you start your carbon accounting, organizational boundary has to be decided at what level we are doing the organizational accounting, what methodology is chosen for. That is very important with respect to JG accounting. Having said this, I think operational boundary is also really important. So one has to know what uh, activities have to be reported within the operational boundary. So I'm sure many of you would have seen this image of scope 1, scope 2, and scope 3 emissions, wherein scope 1 is direct, scope 2 and scope 3 is indirect emissions. Here we have listed all the activities. Of course, you can see all of these activities are scope 3 activities also. Like for example, purchase goods and services, capital goods, fuel and energy related activities. We'll talk about all of them very soon, but one should know where which is applicable. For an example, uh, let's talk about use of sold product. Now, in case of buildings, the use of sold product uh, is seen a bit different, right? Now, if at all you are you're owning the building and you're leasing it out, that definitely comes under one of the other categories wherein you are talking about, for an example, leased assets. So upstream lease asset or downstream assets lease asset, we'll definitely cover it in sometimes individually as well. So there it is already sorted, so there is not actually a proper need of use of sold products, right? So it does not come in picture unless and until you are selling off your property to someone else. That is when use of sold product would come in that picture. So it is very important to know when we talk about which activity. So operational boundary is very important with respect to emissions calculation. And of course, scope 3 emissions is very complex. Uh, Knowing what type of activity data, knowing what type of information we need to calculate it is kind of something that everybody struggles with in this industry. So very important with respect to operational boundary. Um, Quickly talking about the different scopes, let's talk about scope 1, direct emissions. Um, so covers three things: on-site fuel combustions, transportation, and fugitive emissions. Of course, when we talk about fugitive emissions, these are all mostly related to the HVAC and fire suppression. So these will be leakages when we are refueling. These will be leakages primarily from fire extinguishers and HVAC equipments. Okay. In terms of indirect emissions, it is very straightforward, which is purchase electricity. Could come from a distribution company, of course, or could be a power purchase agreement with your power provider. And in that case, it can be a little bit different. For an example, it may have a mix of renewable energy as well as energy generated from coal and other fossil fuels, right? So it is very important to know what the source is, so that you know what is the right emission factor. We'll talk about emission factor also in some time. The other one is, of course, the purchase TIM. Quickly talking about how these can be calculated in case of location-based emissions. For an example here, we've taken USEP as a source. It can be India CA also. But here, you already have the CO2, CH4, and N2O factors. These will be utilized to calculate the emissions related to it. Whereas the market-based emission is where we talk about when we have a power purchase agreement, or if you have a renewable energy certificate or GO, or which is called as guarantee of origin. So these are the two ways electricity emissions will be calculated. So location-based emissions, which is primarily from the grid, market-based emissions, which will be from either RECs, GOs, or carbon credits. Now, I think we've covered this in detail for scope 1 and 2. Let's quickly talk about scope 3. Scope 3 is when we talk about value chain emissions. These are primarily from embodied carbon in materials, waste disposal, tenant activities, of course, very much applicable to real estate sector, employee commuting, and transportation of material, particularly when we talk about construction. Now, as we can see, scope 3 is the largest contributor, even in case of real estate and construction, where about 80 to 90% might be from scope 3 alone. These could be from construction materials, tenant energy use, waste generated during construction and operation, and transportation of materials and workers. When I said 80 to 90% may be the case, it could differ from company to company basis what they do primarily. For an example, in case a company is if the real estate company does construction activities actively, and it accounts for about 50 to 60% of their activity, of course, this will be their largest emission. But supposedly they are only maintaining buildings, for an example, in that case, this will be up slightly lower because there will be only scope 1 and scope 2 emissions, right? So how you look at it differs from with respect to different companies and their operations, right? Now, we'll quickly cover scope 1 and scope 3 emissions for both upstream and downstream. I know we are way ahead in terms of time. We are very short of time, but we'll quickly try to cover this, and we'll go towards the challenges and the solutions for real estate industry, right? I think that is very important for us. In case of upstream activities, there are, of course, the um, 8 or 9 categories. So the 8 of them are here. These are purchase goods and services. This is probably the highest in terms of uh, embodied carbon, because that is where most of the emission comes from when we talk about scope 3 for construction activities particularly. So huge amount of emissions, and it takes years to offset them, right? It could also be in case of capital goods where companies owning a land or building land, of course, does not initially come with embodied carbon, but buildings do. So which is where capital goods come into play, right? Then there are fuel energy related activities, upstream and downstream transportation, waste generation during operation, business travel, employee commuting, and upstream leased asset. Uh, Category 8, as well as another category in downstream activity, which is where we talk about downstream leased asset. These are the most confused ones in scope 3. So upstream leased asset and downstream leased asset. Upstream leased asset is when the company itself is leasing from someone else. Downstream lease asset is when I am leasing it out to someone else, right? So the huge difference in how we look at leased assets. But these are all the activities which are part of scope 3 upstream, right? And now I'm not covering all of them because we have covered this earlier, and I request anybody who wants to deep dive into each of these activities, definitely visit my other uh, webinar. Let's cover downstream activities because we've got other agendas as well. Downstream talks about downstream transportation and distribution, processing of sold product. While I have listed it over here, does not entirely be applicable to a real estate industry. So many companies kind of skip in terms of the reporting on processing of sold products and use of sold products unless and until they are selling buildings, of course, right? Uh, Thereafter, end of life treatment of sold product, that is also something that is not directly applicable to real estate companies. However, category 13, 14, and 15 is something that we see quite often in terms of the ESG reports. So downstream lease assets, franchisees, and investment, all three are being reported, right? I'll repeat this again in case of real estate and construction industry. Category 10, 11, and 12 are the least reported, and only if they are applicable to. In most cases, it will not be applicable. So, so in case there are any doubts, it is always good to go to GG protocol and clarify whether that is something that is applicable to or not. And even before you talk about whether these categories are applicable to you or not, it is very important to know the company's own operations. What is the primary activity that the company does, whether it falls into this category or not. All right. Hope that clarifies. Let's move on to the challenges in GHG accounting, ESG reporting, and best practices. I think that is something very important for us. So in terms of the evolution of ESG regulation, that is one area where people face a lot of challenges. For an example, CSRD is becoming active now in the Europe. Now this is in general because we are talking about global perspective. Uh, CSRD is becoming a problem for people because it's very extensive. And if companies have to start aligning with CSRD for some reason or the other, if they're in Europe, of course, they have to align with it. But otherwise, if they are to align with it, that's a huge activity if they're doing it for the first time. So ESG regulation, as they're evolving, they're creating more problem for people who are in sustainability domain. uh, Another big problem is so many regulations here and there which we have to comply with. For an example, if a company in India has got is exporting some stuff to Europe, whether CBAM is applicable to them or not. So CBAM is border a mechanism wherein we actually talk about uh, how emissions done over here should be penalized for in case there are too many emissions if the product is sold in Europe. So they have to have similar efficiencies, for example, in case of cement, steel, and many others. So Europe is trying to reduce the carbon emissions which are related to products. That is one big reason when this is becoming more and more complex. So the best way, of course, if you've already got to know that this is applicable to you, is to look for the average version of the standards or codes which are applicable to you. Look for interpretation from, global consultancies. They tell you when the regulation is starting, what all to be done in order to mitigate any risk related to it. Of course, ask other ESG professionals for the RISE code, course material and certifications. For example, CSRD, many people are doing online certifications so that they understand what it is all about, because quite simply from the standard, you may or may not be able to make out. And lastly, you break it down for easy interpretation, because here I tend to talk about CSRD a lot because that is something which is a problem right now. But in case of CSRD, for an example, you've got ESRS 1, ESRS 2, and several other standards. So even if you start with ESRS 1 and ESRS 2, you are sorted. You understand where it is going. Same is the case with other standards. For an example, BRSR has got 3 sections, where you've got 9 principles in section C. Now, you may not understand all of those principles and its applicability, but if you go with individual principles and break it down, it'll be very easy for you. So there are a lot of challenges with the ESG regulations and its evolution, and we know that a lot of them will change in the future also. So, we just have to keep a lookout on what new is coming up and keep on upgrading ourselves. The second big problem that ESG managers and people who are working in the ESG domain is problems with the core ESG concepts. So, for example, scope 1, 2, 3 emissions, talking about circular economy and its applicability to the company. Traceability, I think uh, I remember my role at a very large infrastructure company in India. Traceability is still a problem after I've moved on from that company to its 2 years, right? Um Nobody knows how to address traceability, and even before define the problem of traceability. What do you want to trace? Why do you want to trace it, and what not? So traceability is a big issue. ESG due diligence is very important, and uh, companies are relying on consultancies to do the ESG due diligence, but there needs to be due process installed within the company to be able to do ESG due diligence, not just for their products, but also for their supply chain. That means their providers, their vendors, and others. Green building certification requirement, of course, I've seen that could be complex in many cases. Many sustainability consultants also sometimes fail to interpret these requirements once they deep dive into them, and there needs to be a lot of learning to be able to address them, right? Lastly, carbon credits, RECs, carbon exchange, carbon sequestration. I mean, a lot of talks about all of these, but nobody knows how to address it. Carbon credits still, I think people understand to a lot extent, but carbon exchange, carbon sequestration is something that people do not understand, and if has to be implemented and leveraged, I think that's a big problem. Uh, I think here the easiest thing that one can do is go to JG protocol and talk about individuals emissions and what their core concept is. If you understand it, I think that's where all the things are sorted. JG protocol is very well built. One can easily understand what the different scope emissions are in terms of, and particularly for scope 3 emissions, a lot of examples, you can definitely understand it. With respect to green building certification, I think both lead USGBC as well as IGBC conduct a lot of programs and certifications, which are key for people to understanding the different green building concepts. So these are the two things that people can definitely do in order to understand the ESG concepts. And I do not want to endorse, but there are a lot of material with respect to Udemy and many other platforms like LinkedIn, where one can understand the core ESG concepts. Now, talking about the elephant in the room, uh, the scope 3 emissions is a big problem. Now, the only way to address it is to work on real data, understanding the concept from JG protocol, uh, and seek help from the experts, right? Because somebody who is new to this role might not have worked on the actual data, becomes really difficult to understand what will be the actual challenges with the data, right? So scope 3 emissions is very vast. One should look at CDP reports for an example to know what are the calculation methodologies, what are the inclusions and exclusions, and how uh, companies are tracking the scope 3 emissions. Um, Very important with respect to also operational and organizational boundary. One should know that these are the various categories applicable to me, right? So vastness of scope 3 is something that one has to deal along with the job. First day you will not be able to understand it. You have to understand the various scopes. You have to understand what are the KPIs, what are the data that you need for data collection. You have to know how to track those, and you have to know how to validate those. So of course, scope 3 is a problem, but there are a lot of solutions for that. Some of them we'll definitely talk about also. Data collection is a big problem. I think the two major problem with respect to data collection is the data is not generated by you. In most cases, these are stakeholders like property managers or construction managers who do not value the data that you're asking for. And the only way to do this is to upgrade these people, right? You have to tell them that this data is important from the perspective of ESG disclosure and compliances. Once they understand this, they'll definitely support you. You'll have to make the process of data collection very simpler, simple Excel sheets or simple platforms which help them in terms of the right units, in terms of the right activity. Once you have that, I think you're sorted. But it takes a few weeks or months even to bring them to the table to convey the message that we need your support in collecting the right data and reduce time in validation for that, right? They should understand if something like, for example, if they are sharing electricity data, they have to share, let's say, in megawatt hour, and they're sharing in kilowatt hour. That's a problem for you. And if it is supported by invoices or anything else, then it makes your work easy. I have faced multiple problems several times wherein the data came to me and there was no way to validate it, right? There was no supporting document, or there's no way that I could say, okay, this is right or this is wrong. So there needs to be processes in place which make the stakeholders work easier and ultimately your work easier. So very important, you need to have checks and balances in place for this data collection, and more so for scope 3. I in many cases, the scope 3 data collection will not be done by you directly, but through some other department. For an example, purchase goods and services will be something that will be provided to you by the purchase department, right? And in that case, that is not coming to you directly, right? So you're not talking to the stakeholder directly, and it has to be in a format that you understand it. You can feed it into the system if you're using an online tool or a calculator. Okay, very important in terms of ESG data collection. Once you've collected the data, emission calculation is another big problem. So using the right emission factors, I think this is something that we've covered in our earlier webinars, how to tackle it. Um, Doing monthly or annual calculation, sometimes this becomes a problem because you don't know for what period the emission factors are applicable, right? Calculating emissions across multiple assets and locations. For an example, you've got 5 or 6 assets in India, and in case of real estate company, it, it probably would be more, 20, 30, or 40 even. And in that case, calculating emissions for across uh, those assets for all their activity becomes very difficult, right? Um, I'm sorry, I think there's a duplication here. Uh, I- so the solution is very clear. One should understand which emission factors are applicable to you. For an example, the US EPA may not be applicable to you in India, uh, but you might end up using some of the formulas or some of the emission factors which are not available otherwise. IPCC is also available, UK DEFRA is also available, IEA is also available, right? So all of these things uh, are important for you to decide. If you're using Excel, you use it for only scope 1 and scope 2 emissions. Anything beyond this, that is scope 3, and anything beyond 2 or 3 assets, I think you should definitely use calculators. Because it is, even if you calculate scope 1 2 emissions for 1 year, and if you're responsible for calculating for many years or tracking it and seeing how whether you're able to meet your net zero targets or not, you're able to meet your scope targets or not, you will not be able to determine it, right? So very important to know the limitation of the tools you are using, right? Some of the important aspects with respect to carbon accounting, of course, these are something that is relevant, that is important with respect to your carbon emissions, right? The carbon accounting should be relevant, it should be complete, it should be consistent because you're going to do this over a period of time. The methodology has to be the same. The transparency has to be maintained in terms of what you are using in terms of the emission factor database, which year of emission factor database, and lastly the accuracy. So if you are to adhere to the principle of carbon accounting, above are very important. So you have to adhere to all of these, right? Um, Steps for carbon accounting. I think this is something that that is very important for a person who is doing ESG reporting or carbon accounting alone, for an example. I've covered this before. Organizational boundary is very important. You need to understand the calculation approach. Data collection we've covered is very important. Knowing the right emission factors, knowing the right activities, and using the right tools is something very important with respect to carbon accounting, right? Last but not least, I believe it's about the goal stacking. Now, once you've calculated all your carbon emissions, you should be able to track all of this, right? You should be able to see whether you are meeting your net zero target or not, you're meeting your emissions targets or not. And this is also very important because what happens is the companies are expanding. A real estate company is having 10 assets today, but will definitely have 2 or 3 more assets in the next year. And the same applies for whatever size of companies there are. And what happens is your emissions would increase, the number of employee would increase, the square footage would increase, of course, and accordingly the emissions shoot up. So you don't see a downward trend in emissions, you see an upward trends many a times, right? And you have to justify this to your stakeholders, you have to justify this uh, to uh, to investors, for an example. uh, and the companies would grow. As they grow, the carbon emissions would increase. So in order to be able to strategize, you need to track this as well. You need to have projections wherein you can say my carbon emission is increasing, and as it is increasing, I'm also offsetting it, right? So if you are able to use the right tools, for an example, then you will be able to um, track this very well, right? You should have clear net zero targets as well as scope 1, 2, 3 targets. You should have clear KPIs to check if you are on track or not. And lastly, you should be able to use online tools for tracking all of this, right? So tracking the projections, being able to say, okay, these are the various strategies that I'll take this year in order to reduce the emissions and offset is, and the same goes for the next years as well. So as the emissions increase, you have to increasingly offset your emissions while reducing it as well. So these are the various challenges with respect to carbon accounting and ESG in the industry. And when we talk about the Sustainium platform, the platform allows you to do most of these activities uh, through through different modules. So you can have ESG reporting, of course. You can have carbon accounting. These are two main aspects that our tool covers. You have automated data collection, primarily for scope 3 emissions, right? You've got regulatory compliances. For an example, you can automatically create BRSR reports. You've got custom reports that you can generate from the system. You've got us to support you in terms of your carbon accounting and ESG journey. And last but not least, it is the ES real-time monitoring, which is year-on-year tracking, seeing where you are, and to be able to strategize and reduce your emissions year on year. So These are some of the screenshots from our platform. You can see how to tackle scope 1 to 3 emissions, how to strategize well in terms of reduction, whether I'm meeting my targets or not. All of those are covered as part of Sustainium tool. So that's all for today. I know I've exceeded my time limit a lot, but I wanted to cover everything. We can have 2 minutes for any quick questions that are there. I don't see that there are any questions which are posted in the Q&A section. I'm sure I've left out a lot of concepts that we can cover otherwise. I request all of you to look at other webinars that we have hosted, which are in-depth webinars, particularly on carbon accounting, scope 1, 2, 3 emissions, emission factors, BRSR, right? These are some of the topics that we have covered earlier. More will be covered in the later webinars as well, where we'll deep dive into all of these. Yeah, Rohit has asked a question. He says, does your platform include BRSR report generation? Yes, Rohit, our platform does include BRSR report generation. In fact, this is the right time because it is March and the year-end, financial year-end closing. So people would be going on and preparing their BRSR report, and this platform can be a very useful tool for everyone who's doing BRSR reporting for all the companies. So if there are no other questions, we'll close this call. Thank you everyone for your attention. My friend Gideon has just posted a link to our previous sessions. Probably it is, if you want to deep dive into other topics that I've mentioned, please go and check out these events, these recorded sessions. Thank you everyone. Have a very nice evening.